Hey guys, Angelo Lambropoulos, Director of Lambros Realty, and here I am with the February 2021 property market update. I love doing these videos monthly for you, but I must be honest, this is the one I have been most looking forward to. I've had a lot of questions, so forgive me if this goes a little longer than the past ones I've done of late, but there's a bit to cover and I hope that you benefit from it. So what I want to do is, for those of you that did watch the previous month video, I did say that, and I'll read exactly, next month will be, when I did the January one, next month will be the telltale sign for Cherrybrook. Given significantly low stock levels, coupled with the fact that February tends to be the month in which the Cherrybrook property market starts to pick up following the new year, I would naturally expect sales volumes to increase, as I would the median price. I'm tipping 2021 to be the year in which you should start to see quite a few homes crack the 2 million tag in the suburb if stock continues to remain low. So let's see how that translates in comparison to what's happened this month. So there have been 16 registered home sales for the month of February this year. Median sits at 1,818,500, which is whopping. Highest sale sitting at 2,316,000, which with average days on market sitting low at 22. In comparison to February 2020, so keeping in mind this was the month before the coronavirus lockdown measures and all that came into place, that was really the last month where things were normality, I guess you could say. So there were 13 registered home sales. The median sitting at 1,507,500. The highest sale being 1,650,000, and the average days on market sitting at 16. Sorry, I might have the wrong data here. I think there should have been a 1.8 sale, which will naturally take that median up, but thereabouts, there won't be too much of a difference. So average days on market sitting at 16. So if we look at what I said last month, to be honest, I didn't see this rate of growth, and I'd be very surprised if anybody did. I was expecting maybe a 3 to 4% gain, somewhere thereabouts. But just to put it into perspective, try to get your head around this. The February 2021 median price is up 311,000 from February 2020, right, which takes us up 20%. Now, naturally, the median price may be a little higher based on the highest sale, should be around the 1.8. Then if we have a look, if we look at what's happened, which is obviously, this is a much harder pill to swallow. If you look at February 2021 versus January 2021, so we're only talking the space of a month here, the median has gone up 365,000, okay, which is a 25.4% gain. Massive, okay? So the question I'm being asked is, what is the catalyst for this exponential growth? What's causing this? Now, looking at media reports, everybody knows that it's record low interest rates, government stimulus packages, improving economic conditions, and low stock levels, which I always talk about. So that's the catalyst of, if you look at the media reports, that's what they're reporting. But I think stemming deeper into that, and a few of the questions I'm asking would be, okay, well, we know what triggers a market to boom, but when you really start to look at it, so when we talk at record low interest rates, we've seen an overnight change. Interest rates came into play on November 3rd when the RBA met, right, where we hit record low interest rates. So there's nothing different here. This has been going on. Record low interest rates have been here for 3 months. So why this sudden change? The improving economic conditions. Now, I want to read, this is a quote from the CoreLogic's Home Value Index, which was released on March the 1st, okay? So whether this newfound growth in Sydney and Melbourne can be sustained is unclear. With household incomes expected to remain subdued and stimulus winding down, it is likely affordability will once again become a challenge in these cities. Okay, so something to keep in mind. The other thing there, so government incentives. So the government incentives did come into play as part of the when coronavirus to help fellow Australians there. So the incentive packages are more on the wind down as opposed to the increase. So I'd hardly say they are the reason for the overnight change. And look, we all know the impacts of supply and demand, but to be honest, never have I seen that rate of growth, and even in media reports, that rate of growth happen overnight, right, within the space of a month. So what do I think, and this is just my opinion, I think what we're seeing is a state of euphoria. I think ever since there was the announcement and the coronavirus vaccine had hit our shores, consumer confidence had emerged. So a lot more people were confident with the market. They had a lot of savings because they weren't going out and spending. So now there's this confidence in and about the economy as a whole, where they don't mind spending, right? And there's obviously the fear of missing out. So I think the other thing to also make mention, and what people need to understand, is this boom hasn't happened overnight. Yes, we have seen exponential growth, but the boom, really, you could see the signs happening last year. You could see the rate of growth, slowly starting to increase as the year, which sort of bucked the trend of a pandemic, right? What we have seen though is we've seen it go from here to here. So what we have seen is a significant increase. So I'm not expecting the market to crash in any shape or form. I just think that what we've seen, don't expect this rate of growth to continue. It's not sustainable, in my opinion. I do still believe that 2 million is going to become the new norm for Cherrybrook. Again, what Cherrybrook has done well as a suburb is being able to manage the supply levels and not flood the market with stock. I think you'll see in other areas around Sydney, could happen in Cherrybrook, could start to see an increase of stock hitting the market and emerging, which may put some softening on property prices, but that'll fizzle out if that happens. And I haven't seen an oversupply in stock when I've been recording over the past year and a half now. So that's something to keep in mind. The other thing best advice I can give is to transact in relative markets as well. So I've been speaking to a lot of buyers out there that did sell last year, looking to rent in order to buy in, anticipating the market would crash or correct significantly this year, which is not the case. So my advice is, when you're transacting, you want to do it in the same market, because it's all relative. And even though prices, let's just say there is a significant correction, for argument's sake, it drops 20%, where you're looking to buy is also going to suffer the same fate, right? So it's all about managing your changeover price. So that's something to also be mindful of. And as of today, being Friday the 5th of March, there's currently 18 homes listed for sale in Cherrybrook, which is still well below the suburb average. So you'll still start to see sales prices ticking along quite well. And just on a final note, for those of you out there that are looking to sell, I have put an ebook together, which I've been working on for a while now, on how to get the highest price for your property, which focuses more so on maximizing your profit, not so much on spending a mozza in order to get a high sale price. It all comes down to maximizing your profit. So there's an ebook there I put out called How to Get the Highest Price for Your Property. If that's of interest to you and you think you can benefit, by all means give me a call. It's Angelo Lambropoulos, Director of Lambros Realty, office number 0294810999, or info@lambrosrealty.com.au, or visit us at our office address here, which is Shop 2, 132 Shepherd's Drive, Cherrybrook, Apple Tree Shop. So that's hopefully covered everything. If I've missed anything or you want any clarification on anything out there, I'm happy to help. Give me a call. But yes, it'll be interesting to see what happens in March. And thank you for watching.